Step into the game, we're talking wood and grain. Charles bring the heat on Southern Yellow Pine. Mascot US species, all is on the line. Gregg with the spruce, keeping knowledge defined. Ash and moderates, drop the facts in the booth. We on the buy, the sell ain't no hidden truth. Economics and trends, we got it all so clear. Lumber Word Podcast, best believe we're here. If you wanna make more, get in on the score. Join us every week, you'll be hungry for more. Love a been keen, though, whoop made known. Such rain Charleston, slide, plum ram known. Open to the scene, with the lumber supreme. Charles laying down facts with that southern yellow bling. Mac got that US swagger like strong timber beams. Gregg's insights on spruce, rewrite the themes. Got the buy side talk, we stacking that flow. Selling knowledge, every week we still a show. Join the Lumber Word crew, let your business grow. For the sharpest minds, here's what a place to go.
Everybody, welcome to this week's episode of the Lumber Word, episode 145. We're doing a little bit earlier on a Thursday, the 29th, 2025.
It's only Wednesday.
Is it Wednesday? Gosh,
Wednesday.
That's right. It was garbage day for me today. My bad. Sorry about that. We got a great guest to get today, Patrick Teoli. Patrick, did I pronounce that right?
Yes, you did.
From BluCirrus. Pat does all of our IT here at Sitka, and we were going to let Pat talk a little bit. I know in the lumber industry, he deals with our Montreal office and us, so he gets a good mix of everything we do. And I was going to introduce him.
I mean, and Sitka is probably, we pride ourselves on being like so far from the cutting edge in terms of technology that we don't even know where that is. We're so far away from cutting edge. So Patrick's used to like working like it's like remedial training. It's IT for dummies. That's what we practice. So yeah. Charles, now you're comfortable, right?
I'd feel a lot better. I'm with like and kind individuals. I feel better.
Is that better? The logo?
No, I mean, this thing's covering up my face. That's all.
Well,
I know a lot of people tune in because
that may have
they want to see your face. That's it.
That may or may not have been on purpose.
Hey, that's fine.
Hold on a second. Let me.
There we go.
There we go. Maybe that'll work.
Charles, we miss you.
So, just real quick for everybody, Gregg and I know are going to be down at NOLA next week. So in Kansas City, just make sure we don't do breakfasts.
No. Breakfast has been off somebody like made me do a breakfast up in Montreal and last year, and I'm still like scarred from it.
Yeah. So to all you rookies out there, when you book the 6 a.m. or 8 a.m. breakfast, think about how that's going to feel when you're out at 2 a.m. the night before. And I've attended a couple of those with people that have been out that late, and it's usually a tough one. So
it's of limited value.
Yeah.
Nothing good happens after midnight.
It's rule number one. That's right.
Depends who you ask.
That's right.
Well, nothing good happens
rule number
in
2
Chicago
is
after midnight.
Always go to bed the same day you get up.
That's right.
That's true.
Charles,
we're showing our age now, Gregg.
Rule number one.
Yeah.
So Patrick, I wanted to jump into what you do, and one of the interesting things when you sent over a little introduction about what you do, was perfect. When you basically said you do things that a lot of people let their son-in-laws do and run their IT departments. Basically, don't do that. Don't use nepotism to run your IT department. So talk to us a little bit about what you do, like with us and with other companies. And are you doing anything with other companies in the lumber space?
For the lumber space, it's basically you guys. And basically what BluCirrus does is that we take care of everything when it comes to IT because it's IT consulting. But nowadays, you're going to hear a second a term, which is called managed service provider, or MSP for short. Basically, when IT consulting companies come in, we kind of form partnerships with our clients. We don't just call and say break and fix solutions. We like to come in, see and assess everything to standardize your IT, whether that's email service, cybersecurity, or if there's any projects that are needed to be done, standardizations, and or any updates, so on and so forth. So the thing is that it's no different than your accountant. Your accountant also has to look at your books, make sure that everything is good, so you're not declaring too many taxes or not declaring enough, so that you're standardized. So we help companies do that now with your son-in-law who does DJing on the weekends. They just they're kind of the break and fix solution, and they kind of just guess, and then they're like, oh, it works. No, that's not the way to go. So there are best practices. There are best practices which IT consultants do that we implement into companies, and we also implement other tools, which is part of the MSP portion, which we can get alerts, we can prevent things from happening, and also create stuff that will respond quickly to some events that may happen, such as, let's say, for example, your disk is getting full. We can have little scripts in our managed service provider that eliminate a lot of the useless stuff that's in your computer, such as temporary files, so on and so forth, and automatically you never see that problem because it just goes away. So that's basically what BluCirrus can do for you, and going with an IT consultant to help with your IT.
So what size companies do you do stuff for, Patrick? Or like how small, how big?
I have some clients that are one-man shows, which basically doesn't take up much time, but they're more into the break and fix. But then after that, when you start getting into companies, which is in the 7 to 10 range and more, that's when you start going into the managed service, because it'll be easier for us in the IT world to receive any alerts or anything that would need fixing, and then you could just make appointments.
So what are some of the big things? What's the reoccurring calls that you get all the time from your clients?
There's a few. The very first thing one of the reasons why I'm very glad you're inviting me on is because the son-in-law doesn't know much about IT security. So then IT consultants will implement IT security and whatnot. And I want to also bring forward to how to protect yourselves against anything that might be viewed as malicious. For example, your best solution out there is that there are tools that are out there that'll prevent you against yourselves. What does that mean exactly? Is that we can see that if there's an imposter email that comes in, because these people who try to hack in do have these tools to be an imposter, because I can create an email, Ash at, with the name of Ashley, but my email will be abc123@gmail.com. So the person is going to receive it and then just going to assume because they only see the title. So another thing is to look at signatures. So there are cybersecurity tools to prevent imposters, to send malicious link also. And on the malicious links, I would also like to say that unless someone tells you, I'm going to send you a link so you can have access to the file, don't ever click on any links. Also, at the same time, to protect yourselves, also know a protocol should you suspect anything. Who do you call? Is there someone internally that might be astute to these things because they often speak to the IT person? What is the protocol should something happen? And the other portion about IT security, which is the last layer, is your backup or any disaster recovery. So that's another tool that we IT consultants put in, is that make sure that there's a disaster plan. Also for documentation, which could actually be, on a side note, it could actually be very, very important for if you want to standardize yourselves to be qualified for IT cybersecurity insurance.
Yeah. So Patrick, it's crazy.
Hey, Ash, real quick, I just want to let go. Like whatever he's doing is working, because I'm no longer getting the email that says you are a very trustworthy person and I want to send you $10 million. All you have to do is give me your, social security number, a credit card, send me $1,000. I'll give you 10 million, some prints from, somewhere. Yeah. I don't get those anymore, which is
That's
great.
called elder abuse, Greg.
Well, so like when you get an email that
fired, Beamer. Shots fired.
Patrick, what you said makes sense, because when you get an email,
I get them too,
that comes in, like when I worked at a big company, they would send us spoofing emails to see how many people would open it or wouldn't open it, until they basically got, in the first few times they sent it out to 1,000 people, 20% of the people opened them, right? And because you don't think about it, and like you said, some of them they'd send us with an email, if the same name with it just spelled one letter wrong, or like you said, a Gmail, or they send something out like, "Hi, this is the accounting department. Please, can you send this to AR and send all your money here now?" And like, it's crazy how that just happens, and people So like if an email doesn't make sense at first when you look over it, you probably should just delete it or not open it, right?
Your first instinct will be the correct instinct. And even if it's not, that's okay. I'll tell you, no, it's good. Don't worry about it. I'd rather you ask me and I say yes than click on it and say, oh God, here we go.
Isn't that half the problem for you though, Patrick, is dealing with human error?
Absolutely.
Phishing scams and things of the same sort.
Absolutely. And even I'll just tell some crazy story is that people who deal with trying to gain information, one of the best sources for them to gain information on you is on social media. It doesn't matter which one it is. It could be Instagram, Facebook, LinkedIn. If you put too much information that's on there, they can use that as a tool to try and hack in. If you ever want to look up a story, see how the MGM Grand was cyber attacked and how they had ransomware shut down the whole hotel for I think it was a little over a month.
How do you stay ahead in the softwood lumber market? With prices shifting and trends evolving, making confident decisions starts with having the right insights. That's where Fast Market's lumber commentary can help. Every month, we provide clear, expert analysis of North American softwood lumber trends. Whether it's housing starts, remodeling projects, or industrial production, we break down what's driving demand. You'll also get access to the trusted Random Lengths framing lumber composite price, along with key historical data and future forecasts to guide your strategy. And it's not just the numbers. Our analysts translate complex data into actionable insights, helping you make smarter, faster decisions. Get the clarity you need. Find out more at fastmarkets.com/lumbertalk.
I mean,
is ransomware still a big
that's
deal?
why I'm not on TikTok. I didn't want the Chinese to get access to my stuff. Now,
Exactly.
it's going to be okay. You know, I'm going to be fine once Larry Ellison can have my stuff because he doesn't need any of my stuff.
Right. Of course.
So you're in the future, I'm seeing a lot of the growth in the AI sector of the market here the last few years is kind of the talk of the town on Wall Street. And my question is, when does AI stop being a novelty thing that you can go mess around with on the internet with Chat GPT or Grok or something like that, and actually become a tool that stops human error when it comes to these phishing? You know, when do we fight back? And you would think that the AI space would be the one that's going to fight back.
Well, you just said it right there. Usually you'll fight AI with AI. There's always an adaptability that needs to happen to prevent any human error or you fall for any of these AI attacks. I'll just give an example. Let's say all of a sudden you get a pop-up like Ash created, where you get an email where it says, oh, can you send me the bank information? But then again, if you look lower, it looks like there was email threads with an AR, but then all of a sudden you get it. So you'd have to be very wary of that. That was most likely AI generated, and then after that, just sent out. So a lot of these cyber criminals are also trying to use AI to gather information and then try to push out emails. Oftentimes, a supplier such as myself will put in IT securities in place which have their own AI. It doesn't matter which company it is, but mostly the reputable companies are also developing that. So you kind of fight AI with AI.
I mean, I always find like the big tell, like if I get an email on my personal email, like outside of Hampton, my wife gets these, I get them, Greg, we all get them. And I always go back to, I look at the details of the email before I even think about responding to it. And it's always a spoof email address, right? So it says it's from Amazon Services, but then if you look at the actual email sent from, it's like some Gmail account with, you know, a stupid name. Yep. And why can't AI just eliminate those before they even hit your inbox? I mean, you like anything that's a spoof should just be eliminated, like automatic junk. I don't even know how they get through, to tell you the truth.
Well, you just said the key word there is that you're using your Gmail account. Unfortunately, the Hotmails, Outlooks, Gmails, Yahoos of the world will not prevent that spoofing. The reason why is because when the email comes in and it's a Gmail account, it's viewed as legitimate because it actually comes from Gmail, even though the spoofing happened. If, let's say, you're using your domain as your email, instead of using a company name at gmail.com, which is not that secure, but if you use your domain as your email, and if you're using a reputable email service such as Office 365, Google Workspace, so on and so forth, you can then implement securities, because these cybersecurity companies have the AI that will say, hey, this is not the writing style of the person. Are you sure that they actually send it? I'll give an example. Let's say you have on your own personal Gmail account that you want to forward to your company email. It happens, whatever, or an employee does that because they want their papers for termination papers. So then you're going to get a warning that'll say, oh, this doesn't match this person's writing style. Is it legit? And then you can say, yes, it's legit because I'm expecting that email.
Yeah.
If not, then it's going to say, then you could just say, no, I'm not expecting that email. And then that email just goes away.
So Patrick, Matt, to follow up what Matt said, like, we obviously are sweeping a lot of stuff because I have stuff that goes into my junk email a lot that's actually legitimate email too. What's the best way to what's the best way to approve it so the next time that sender sends it, it doesn't go back in? Or is there some people that are always going to go into junk mail?
Well, a lot of the people that are out there that maybe they don't have their emails configured properly. Basically, what that means is that nowadays, when emails are delivered to the domain, and the cybersecurity companies will look at the email, they'll judge whether it's clean, it's dirty, or whatever reason, and then after that, it gets delivered if it's legit, or it just gets dropped, period. So oftentimes, let's say a domain always goes into junk. An easy look to do is the IT person would have a look at the domain and see if what's called the MX record is configured properly, and if it will, and also SPF or TXT file. I won't get into the details what it is. The IT person knows. So basically what it does is that it'll check the security, and if it passes the security, then the email is going to get delivered. But for the most part, even if it's junk, it's going to get captured and say, something's not right with this email. It's not configured properly. So
are
then,
you using like Mimecast as a filter, or are you just use Office 365?
Office 365 has their tool, which is actually a great tool, but you have to pay the license for it. There's many companies that are out there that'll do it, Mimecast being one.
It's just like Mimecast, okay.
Yeah, there's a lot like
Charles,
them.
You see what Matt just did there? He went next level. Like, I'm dialed in on this stuff, huh? You need to catch up, brother.
But you've got to remember, Greg, I started out in the computer business, and
I know.
My first job out of college.
You're a tech nerd.
But we use Mimecast, and it's actually a good program, because if I'm not getting an email from somebody, I just go into Mimecast and I look at my delayed or deleted emails, and I can find them, and then I can approve them. So it has a block and unblock feature, and then once you're unblocked, I should be getting your emails in the future. But it takes a little bit of effort.
Am I still blocked, Matt? Is that why you don't reply to my emails?
Dude, no. In fact, I need to get you on the account, dude, because you're going to be my first Yellow Pine customer. I need to sell you something so that somebody else doesn't try to steal you before we open that new sawmill.
Well, I mean, I'm waiting on you, man.
So, hey, Patrick, so why, so what's your core customer that would be listening right now? Wholesaler, mill, retailer, anybody else listening that is basically raw dogging their IT right now, and and basically doing it on their own, right?
That was a little aggressive.
No, you can use it. You can use that term in other ways, guys. Get your mind out of the gutter.
Yeah.
It's
sorry at heart. I'm still 8 years old, Ash.
Well, to those that are raw dogging, what I would suggest to them, what I would suggest to them is put on protection. How do you get that protection? Well, you consult people for that protection.
Exactly.
You know what? To be quite honest with you, one of the offers that I do for people who want the network assessment with promising of being a client is I do a free evaluation with someone in the company to assess what they have. I'll look at the documentation. I'll look at all their practices, what they do. I'll see what what needs improvement, what investments that need to be done. Because let's just be honest, when it comes to that, you need a budget. That's for sure.
Yeah, that's right. And how many companies do you think right now? I mean, not talking the big companies, small to mid-sized companies don't really have the proper protocols or proper procedures set in place to protect themselves adequately from incoming security threat, cybersecurity threats.
Well, not to scare these companies, but we can do these in steps. We can go full blast and get it done all right away, or we can do it in what's priority 1, priority 2, priority 3, priority 4, so on and so forth. They may already have some stuff in place, so then it's just to reevaluate who needs certain protections against certain things. So, I mean, that comes with the evaluation, and it's actually more affordable than you guys think. It's easy monthly payments where you can have all these protections.
And
Right.
I mean, like, honestly, for everybody, I mean, we've, full disclosure, I mean, Sitka's gone down the road, and we've had to deal with all of the negative consequences of not having the things in place. And so, we're kind of doing this. This is a service for any like small to medium sized company that may not have enough protection right now. It's like, man, it's a bummer, and it's expensive, and it's unnecessary at this stage of the game. I'm going to say, Patrick's done a ton for us to get us to a place where, we feel we have adequate protection against the things we need to be protected against. So I mean, that's my plug.
But that's a great,
and
great.
we appreciate Patrick could be coming. He may be he may be a future sponsor. Who knows?
That's a great point. But also, I'll go to Matt in a second. But Pat does other things, like installs things for our enterprise system provider when we're changing. I mean, he does stuff not just cybersecurity, but all type. When we have issues with things on our computer not working correctly, and like I said, if I'm plugging it and plugging it back in doesn't work, we generally call Patrick.
Then the second best thing is you just call him and say, I'm having the problem, and then it fixes itself before he actually even does anything. Just calling him fixes it. I
have a question for Patrick.
Stuff.
Sure.
Patrick, are you sound Canadian? Are you a Canadian company? And I'm just assuming, so maybe I'm wrong, but then if I'm right, do you do business on both sides of the border? Or, I mean, like, or are you just looking at Canadian business?
No, I do both sides of the border. I do Canadian. I do also have an entity in Miami.
Okay, right on. And I sent something to Patrick the other day. I was down at the beach, the dog beach, and I ran into a venture capitalist guy that's going around the country buying companies like yours because they don't feel like they're charging enough. So the VCs want to buy you guys up and then like 10x everything.
Well, that's the thing with I love doing is being a partner with small to medium-sized businesses. I love the communication. I love the one-to-ones that we can have. I love to assist in projects such as Sitka is doing now. I absolutely love it. And then I see how everything evolves in their IT, and to be a part of it is awesome. And that's what keeps driving me to keep going, even at my old age. Also,
whoa.
So,
and just Patrick for people.
I mean, just so everybody's like, I mean, I'm seeing Patrick kind of like click out. I mean, I want everyone to fully understand that he is an AI simulation.
Pretty much, yeah.
I appreciate
GPT. All right,
Patrick.
I
So
got
you put your email up there, but so
Yes, I
just so
did.
everybody that when this goes on to podcast tomorrow, it's PTEOLI,
Yeah.
Teoli at BluCirrus.com. That's BluCirrus.com. So I highly recommend you use Patrick, and at least uses basically you come in and you'll do an estimate for him and a assessment. Yeah. Well, Patrick, we appreciate you coming on, my friend. We've been trying to do this for a bit. I'm glad you were able to do it. And
It was my
Yeah, good
pleasure.
luck to you.
Obviously, everybody in lumber, one of these things doesn't fit. If we do an old joke, I could be like Bob Dylan in "We Are the World," that crappy voice. There you go, Charles. I lost you. I like that. I love
Yeah.
that joke.
Charles going, what? Huh?
Charles like, who's Bob Dylan?
yeah,
No,
yeah.
yeah. He's like, he heard like a Rolling Stone. He goes, is that Lou Reed?
You guys want to talk about lumber?
You're welcome to listen in on the lumber if you want, but I mean, I don't know. You may.
I definitely look forward to seeing this podcast.
Sounds good. Thanks, Patrick.
Take care, buddy.
Right.
Thanks.
Have a great day.
Nice
guys.
to meet you.
Nice to meet you too, guys.
All right, lumber boys. It's Wednesday, not Thursday, and we got the board off. How much, Greg?
We are currently at $549, down $1,750.
Okay, so the last number that we saw recorded in the ledger in the print was 585 Chicago on spruce and 565 on Hem-Fir. Are those numbers still accurate, or are we below those numbers or above those numbers? Where's cash? Charles, as you know, likes to dabble in the cattle, and I was looking the other day, Charles, how cattle futures sold off 3 days in a row and went a huge discount to cash, and now they're up limit again today, right?
Almost.
So I see cash right now. I see the board a big discount to cash. Or a discount to cash. How much of a discount is it right now, Matt? On Hem-Fir, what's the discount right now?
You can buy Hem-Fir 540 to 550 Chicago from me right now on this phone call.
Okay.
And then I don't know what spruce is trading at, but I would guess it's not 610 or 620 Chicago anymore. It's probably closer to 575, 585. And I don't think there's a lot of volume there right now because people are running scared, right? You think about the cash market the last 3-4 weeks, people had this false image of a market that was going to take that 10% and just eat it and pass it on. And so there's been transactional business, in the higher levels here. Now that those cars are now rolling to them at a high price, and the board tells them it's worth $60 less in like 72 hours, right? And then guys like us were sitting here for the last 2 weeks going, sell the premium, buy cheap cash, don't buy spruce, buy something else, buy Hem-Fir, buy Doug fir, but stay away from spruce at 610 or 620, sell it. And now what's happened? So, cash is messy, dude. It's going to be messy until you see some stabilization in futures and the mills, the mills are going to have to do some heavy lifting here. There's some cash that needs to be moved. My inbox is full of mill offers, and I don't think there's a lot of takeaway. So,
no. Charles, Southern Pine, what was your thought on that?
Sloppy at best, honestly. I mean, it's chaos. There's no real way to describe it. You've got oversupply. You've got truck markets that change every day. It's disconnected, and if you're going to buy, you've probably already bought, and you don't need it until Q1 of next year, so nobody's in a rush. That's the scary part about the whole thing. Even with curtailments and quiet shift cuts, it's difficult. I mean, it's difficult to trade it. You still have no liquidity in the contract on the board, which I'm trying to. And Ash and I talked about this weekend, trying to create some way to have more volume traded there. So there's actually a hedging mechanism that's true to form. but there's a lot of risk in Q1, and I don't think anybody's worried about it today.
Gregg, spruce side, what are you seeing on that? Euro, spruce, all the above, right? We saw a big EFP list come out today. We'll take a look at that.
Yeah, I mean, I've actually perused that a little bit, and there looks like that's nothing with at a 550, that makes a whole lot of sense to me on the first glance. Yeah, I think, the thing, Matt, you said, like, people thought they were going to take the 10%. The amazing thing is that doesn't happen. It's never happened. The market.
You called it, Greg. You said we'll sit around for 2 weeks and then the mills will have to, come find the market. Well, that happened last week, and now we're in disarray this week.
Right. So I look at the calendar and I go, okay, so there's 3 weeks until Thanksgiving week, which you're going to get, a lot of, at least in the U.S. South, you may get some guys that shut down for the whole week instead of just the 2 days. And then there's 3 weeks until Christmas. So I'm going, okay, I had a conversation the other day. Guy said, Greg, why is it that the market hasn't reacted more to curtailment announcements? And I said, that the real feel on that isn't going to be felt until the first quarter, and the market has to overcorrect on that. So, to
that talking point though, Greg, can we also discuss the fact that some of these announced curtailments, in some form or fashion, there's a percentage of them that supply never even touched the market. It's just a maximum production capacity that is further being reduced by what
you think it's kind of a ghost announcement? Is that what you're saying?
What I'm saying is, if you have a mill that cuts 300 million foot and you're only running 200 and you say you're cutting 150, right? You're only really cutting 50.
So the difference between what you see in Pine versus, like Greg said the other day, the Sinclair announcement when we were talking, that's a real cut, right? Because they're going to take basically, if I read that, half their production off.
Yeah, 40%. They're cutting 40%, which sounds to me, it's like, hey, we're going to go to one shift 4 days a week instead of running 2 shifts 5 days a week, right? That's about what that ends up being. And there's a number.
The problem really.
But see there, they set a precedent as to how they were running before the announcement.
Right.
These other announcements.
But
you know what I mean?
What really matters though, Charles and Greg, is that we just have muted demand. We're in the slow part of the year, and people don't tend to really want to build inventory in late October through Thanksgiving. People really don't start thinking about that kind of stuff until a lot of times right before Christmas or right after Christmas or New Year's even, and so
they can take
now, even though, we have switched over to the long seasonals now. We've kind of, like, once you're getting to early November, you're starting to hit your seasonal pattern goes back up a bit, but there just isn't enough demand. And we've been talking about demand for a while. And I think until the marginal output starts to become lower than the marginal demand, then we're just going to have these markets that react to news that we have no control over, whether it's a tax or a tariff or something, or a milk curtailment. And then you just have a deflation afterwards because there's not enough sustained demand behind it. Now that will change, I believe. I talked about this last week when I said I think the first quarter could be problematic for some people trying to load up on inventory because there won't be as many vendors available. They won't have as many options. But we need to see those curtailments. Until that happens, you should be maintaining a short risk scenario, not a long risk scenario, in my opinion.
Can we agree that the mills that have sustained production through all of this, and everybody saying Q1 is going to be better, hopeful, right? Can we say that a majority, and I don't know what that majority percentage is, but let's just say a larger percentage of those producers are going to continue to produce through this, hoping the other side is rosier than it is today?
Oh, we talked about that last week.
Then it's a question of what your burn rate is, right?
100%.
That's my thing.
Who's got the deepest pockets?
We had the lowest cost producer in North America announced $200 million loss in Q3. The run rate now in Q4 is going to produce a bigger loss than that. We'll get reports next week from two of the other biggest producers, which I suspect are going to be bigger numbers than that. Like, I just think the market typically has to overcorrect. Matt, I keep having this discussion with people about demand. Housing starts are flat year over year. Repair and remodeling is arguably flat-ish year over year. So it's not that, demand isn't collapsing, but it's not accelerating. So it feels like it's less than it is. It's all about supply, as it has been for the last 24 months. And, history says that the market has to overcorrect. I think, people that are holding out that things are going to be better in the first quarter, how much better does it have to be if you're a Canadian producer losing $150 to $200 a thousand today? Do you really think the market can be that much better between now and February, March?
My opinion is that the market could go up with the same amount of demand, and it would just be a supply imbalance, not a market pull type thing, but more of a supply push.
To your point, though, also, here we are, we're going from seasonal weakness to seasonal strength, but that's driven, fourth quarter historically is the largest production quarter of the year because all producing regions are clicking on all four cylinders. First quarter is the lowest producing region because, that's right, it's winter, right? So I'm going to go back. Ashley's going to kill me for saying this. Inventory is an asset, not a liability. We're a distributor. So, we have a full inventory complement because, what? That's the business that we're in. And if I look at today's prices, what's my downside in these prices? My downside is that we lay here and we don't do anything for the next 60, 90 days, right? It's not like I need to worry about 8-foot studs falling from the low 400s to the low 300s.
Right.
That's not going to happen, right?
So
I don't think so.
Let's talk about what I heard you say to somebody.
Let's clarify that.
What I heard you say to somebody
that
today,
would be like a 7 or 8 year low, right? You're talking about you don't make your risk assessments based on decade type numbers, right? You look at 3-5 year trends. You look at the current market makeup. Now, if we were trending lower on housing starts to heading down to 1 or 1.1 or something like that, where demand is now dropping actively 10 or 20%, then you can start talking about $300 studs again. But that doesn't seem to be the case. And I think we're in a part of the market where the pain threshold is becoming so high, and all these unmet expectations of all the sawmills that sat around and thought 610 and 620 was their future, and now looking at a 540 or 550 as their reality, they're going to walk into the next board meeting and just go, I give up. We're going to have to do something here, right? So, you get into the overreaction phase of the market, and that's when you want to buy. Like, Charles, this. When the mills come to you in desperation, that's when you want to buy, right? I mean, otherwise, why are we in this business? This is like the entire point of being a commodity trader, is that you don't want to buy at the very top when everybody else, doesn't want to sell you. You want to buy now when the market's ripe for it, and you can put on really good basis hedges and things like that, and take calculated risk for long-term decisions.
So if we look at right now, November, okay, let's say it's right around the 549-ish area. January's around 583. What I heard you say to somebody today, Greg, was I could see January not going much farther in November. I mean, November kind of is like
based on what Matt said, November's on cash for
it's
him.
A cash trade now.
Yeah.
I'm looking at November going, I don't know why November doesn't test the 520s, which is where, September went down to the 520s. right before it got squeezed at the end.
Yeah.
And so I'm going like right now, there's nothing to say. I mean, 520s, 500. I mean, here's the deal: until you get like massive, more substantial curtailment, because it's too early for guys to be really positioning for substantive first quarter. You're probably three to 5 weeks away from that, right?
We're excited to welcome another sponsor to the Lumber Word, Lehman's Lumber Guide. Matt Lehman has spent decades studying lumber cycles, and what makes his analysis different is that he doesn't just tell you where the market is today, he shows you where and why it moves. People across the lumber and panel supply chain, from mills to traders, builders, and buyers, have found Matt's work spot on and made it part of their go-to playbook for making smarter decisions. I'm Ashley Buckhold, host of the Lumber Word. I've had a chance to dive into Matt's publication and attend his events, and they're always fascinating. What really stands out is the community around them. People across the supply chain learning together, sharing insights, and sharpening their skills, just like we do here on the podcast. Lehman's Lumber Guide is now part of the Lumber Word family, and we're grateful for their support. After you head to laymansguide.com, that's LAYMANSGUIDE.com, click on the 1-month free trial and sign up today. Thanks again to Matt and his team for helping our industry learn and grow together.
Yeah, and you're also asking people to add inventory into a end of year tax inventory type taxes for some of the states that have inventory taxes,
Right?
like Texas, for example.
Yep.
To add inventory and then get taxed on it on December 31st, because there's not enough day-to-day transactional business to go out and buy 2-3 million feet of material right now and then just flush it all in 3 weeks. It's going to take longer than that to move that volume in this environment. So I don't think that's a winning argument. I think the mills have a lot of pushing to do here. And you're right, we could hit that 520. That was kind of my target. Once we broke through the 565 barrier yesterday, I was like 540 to 530 is the next target zone. And I basically hit that.
And then I'm just like a lumber buyer. I was just saying the same thing as you, Matt. It's like, then it got to like the 540s. They're going, well, hey, so now it's like the 520s. Right?
The ultimate low is 499.
Hey, maybe it can be 500s.
Yeah, 499 is like the bottom of the Bollinger Band in September when the last contract expired. So yeah, we could have 120. I'm not saying it's going to happen. I kind of doubt, but we could theoretically, if you're just a technician looking at charts, we could have $135 reversal in the span of 3 weeks. That's painful.
So, like,
look, dude, that's a lot of real money disappearing.
Overly bearish or overly bullish, or both?
Say that again.
For our listeners, are we coming over as overly bearish or overly bullish?
I mean,
I think it depends on the time window.
Yeah.
Yeah. I mean, because my thing is, I'm going, hey, short-term weakness is going to be evident, but if you're a long-term player, today's prices, if you're not afraid of, $5, $10, $20, $30 of downside, like, or have a buy strategy to buy into it, that's a no-brainer right here. You want to be a long-term buyer. Short-term, yeah, there's going to be continued weakness, but long-term, you want to be a buyer here.
It's just
right?
one thing.
What is January at?
Matt mentioned it. Gregg mentioned it. Charles does it. So all three of us here, four of us, we EFP lumber. Just for all you listeners out there, you don't have to go through people and only EFP with mills. You can EFP.
Yeah, you can EFP with an individual.
With anybody. And there seems to be like this wall setup of the string in the can theory. By the time the retailer down there gets through his broker, then to the mill and back to him, they don't know what in the F they're talking about, right? Like nobody has a clue. So like I know Matt, Gregg, and I are EFPing Hem-Fir cars right now. So you can call either one of us if you're long futures and your boss is calling you saying, how are you going to get out of this thing? Well, you can go to Spruce or you can go to the lowest common denominator, which is Hem-Fir and EFP cars with Matt, Gregg, or myself. You can also EFP Southern Pine with Charles, 2x4 and 2x6, 9-foot, other stuff. Charles has done it. So what I'm saying is get outside of what the same group of people have been telling you for 10
Get outside
years.
the box. Get outside
And
the box.
start thinking for yourself. Don't just
Well, you
listen
could
to
also,
somebody.
Ashley, you could go out and buy either through EFP process or through cash discovery process, or just buying the November contract and selling the January contract against it. You can lock in $35 1,000 basis trades and sleep at night for the next 90 days if you really want to, protect yourself. Like, I don't think we could do what we do without knowing that.
Matt. I always lose money being short January. Why is that?
I don't know. I honestly, I don't know. That's a great question. So Charles, back to the yellow pine thing. You said trucking. Can you expand on trucking? You just mentioned it as a comment.
I mean, I was just touching base on the fact
detail.
where, I mean, it's a truck market. You clean up one mill, another mill's got another problem 2 days later, right? And it moves so fast. Once again, I know I've said this before, but our go to market or mark to market effects are a whole hell of a lot faster than what y'all dealing. So if you have an issue or a mill has an issue, or to your point, Matt, you want to be buying when people want to sell, right? It's a good opportunity for you to really analyze that offer to figure out what kind of value it brings to you, because not everybody's in that boat, right? And it's going to be very sporadic. And if you're prepared to do it, to Gregg's point, long-term play, you could put yourself in a position to win from now until the end of Q1 and not feel effects of some of the winter issues and supply issues that we could run into.
Are you still relying on snail mail publications from the 70s to reach the forest products industry? It's time to upgrade. Advertise on the Lumber Word podcast and get in front of the lumber world every single week. Our episodes are tuned in by the largest segment of influencers inside and adjacent to the forest product sector. Decision makers who shape the industry. Ditch those tens of thousands spent on outdated print ads and project your product or service across the podcast universe instead. Ready to make the switch? Head to thelumberchannel.com, click on Connect, and drop us a line with your info. Let's amplify your message today.
So if yellow pine futures isn't going to take off, you're using that as a EFP hedging tool, long, short. You can use it the same way Gregg and I use the spruce one. If it
100%.
doesn't work out, do you just go switch over to the spruce contract, or is there a correlation?
That's
in
how
your
we
mind?
before the pine contract came out. That's exactly how we EFP'd. You would just figure out what your discount or your adder is, right? You got to agree.
And is there a long-term correlation between the two? I always thought there was sort of a disconnect.
There's been a very big disconnect over the past 24 to 36 months as far as how they react.
No, they correlate perfectly. They don't.
Yeah, exactly. Like oil and water.
Okay.
Perfectly opposite.
They perfectly correlate. They don't.
And see, if you look at that from
Can I hedge OSB with the futures contract?
So Ashley, you're talking about.
Go ahead.
Go ahead. Sorry. No.
No, what I was going to say is if you look at it from a long-term perspective, they actually worked out really well and they mingled very well until species swapping in the Midwest and the Plain States became a thing, right? And then you have huge peaks and troughs, and they counteract each other as far as pricing strategies and buying strategies go.
Well, so
you really have to be in tune and know what the hell you're doing.
Hey, where's January Southern Yellow Pine futures at right now?
386.
386. So basically
$170.
If you bought West Side 4-inch, even though you don't put it on the ground, at 310 or lower, let's say you can buy underneath that 300 or Central at 300. Why wouldn't you buy Central, put it on the ground, and sell that 380 something against it, sit for 3 months or 2 months, and then ship it into the Eastern thing and clip a coupon?
Sounds like a good idea.
I mean, it works. It just people are too dumb to figure it out how to use it.
Well, I mean,
I don't think we want to call our listeners dumb. I think we should.
Matt, I agree with you. Let's not do that. Let's not go there. Come on, let's just.
I'm sensing some frustration.
So
from
I was on the phone.
Ash, to that point though, one thing to take into consideration, because once again we are a truck market. Everybody is used to a delivered origin number in your North American species.
So
you're looking at a price,
yeah.
and let's just say your average freight adder is $335, right? So $35 to ship it. So you're at $335, 6 or 7 to unload it. You're at $342, right? And then say you ship it in February, there's another $24 in storage. So you really handicap yourself, and it doesn't pay to put pine on the ground for that very specific reason.
Right.
And even if you look at it from
two things are, you have slippage in that you have freight in and freight out as opposed to one freight, and you have to store it inside, so there's that extra cost. So it's probably you need $40 or $50 to break even for 60 days.
All right, so let's sell January Southern Yellow Pine and buy 2x10 number 1 20-footers, which has a $200 basis right now.
Or if you want to get away from
and there's
basis,
lots of liquidity.
Or
Question for
decking, or
Ash.
premium decking.
Ashley,
I'm just saying, Ash. Pick something you can sell.
I'm just saying, is like there are ways to use it if people actually looked at all the charts and figured out how to use it.
I mean, Ash, I'll be honest with you.
They should call us and we'll tell them what to do.
Well, I mean, full disclosure, I would, if there was more liquidity, I would like to use it going into Q1.
But the great thing is,
we need more market participation.
The great thing is the way it settles as like a 10-day swap going into the close. You don't need the liquidity. Once you set a number, it's gonna actualize at the print number.
Yeah, but see, if I go in and if I go long, let's just pick a number, right? Say January gets 360, I go long 25 contracts.
Yeah.
Right. So all of a sudden I went from 360. I'm manipulating a market based on my market position that is going to artificially inflate a cash price, which is going to go against me. Now, granted, you win on one and lose on the other, and you depending on your hedging strategy, you have percentages that lay out, right? But you're also in a scenario to where that market has huge peaks and troughs that create a lot more risk.
It's not realistic. Yeah.
Bingo.
It's not as big as the actual cash market. And so it can be manipulated.
Very deceiving. Very
Ashley,
deceiving.
What's going on with Euro? Like, let's give the listeners some on the ground real time information about Euro production and
2x4 16
and what the
6,
future
7,
holds.
2x4 16 670 2x6. Everybody wants to buy 14s and 16s. 2x6 16s lightly offered. I've got some lists from some of the producers that put 10% into it, and their nosebleed numbers. I think a lot of the market out there is waiting for another bunch of vessels to land and believe there's going to be a lot of volume. I don't think there's going to be a lot of volume as much as we think is going to. But Greg, you talk to a lot of more than I do. What's your feeling on Euro Euro studs? We had a vessel hit 3 weeks ago and sold it all, or 4 weeks. It sold everything, and people are still looking for studs. But
from what I can see, that there's only going to be less volume that hits U.S. ports between here and the end of the year. That's what I see. And part of what is confirming that is, we've seen the price of Eastern, the two biggest items they ship, 2x4 16s, 2x6 16s. So 2x6 16s have moved up from sub 500s FOB the port 5-6 weeks ago to, now where we're getting $600 FOB Northeast reloads on 2x6 16s. 2x4 16s, which was carrying the highest and the best price, now with a 10% tax in it, are they still going to come across? I mean, we've been offered some wood for December, January arrival that based on, we can't hedge it based on where futures are today. We'd be locking in, I estimate we'd be locking in a $40 or $50 a thousand loss. And it's at or above what the cash market's trading at right now. So, my sense is that you're going to have less come in the next between here and the end of the year, and even less come in the first quarter.
One other thing, Matt,
I think
that's a good thought.
Yeah,
go ahead. Sorry, go ahead.
I just think it's been about an hour, and it looks like Charles needs to go somewhere. So, but
Well, he's got
some doggies.
He does. Well,
He has
hey,
some doggies to move.
next week we'll talk about contracts and how mills in Canada are putting a floor price into contracts for the big box stores.
Oh,
now.
so just a FYI, we're in Kansas City next week, Ash. Are we gonna try and do a show from Kansas City? Are we gonna skip till the following week? What's your sense?
I think I can load. I brought the equipment. I think I can load enough equipment up to bring it down there where we could do it from the room one day if we want to.
Yeah, so we'd have to do it on
one other.
We'd have to do it on Thursday morning because there's a luncheon that starts at 11.
Yep. What's that, Matt?
For the people that think we sound overly bearish, there is some bright light on the horizon when it comes to the Fed dropping interest rates and mortgage rates continuing to fall. And I think that is a good thing for us. It's just not going to be an overnight thing here. But look, it's not like, if you look at your 401k, it's not like we're going broke. The country's doing fine. We just have high mortgage rates and high cost of entry for young people. And once we can get that sort of sorted out, I think that's going to open up some more space in the building in what we do, and that'll help us. So, I don't think this is all doom and gloom going forward. It's just going to take a little longer than some people want.
Matt, to your point, there's a lot of bright spots. There is. You have to be a long-term thinker.
It's just that when you get a big sell-off like we just had.
Because, everybody's getting lulled to sleep, and it's very easy to jump on the bandwagon of, hey, this is horrible, right? And it's not the case. You just change your philosophy and your approach and how you play the game, right? It keeps you on your toes.
It's horrible if all you do is go long all the time.
Well, the interesting thing is I
didn't say that, but yes.
I had this interesting conversation with HQ about October. Our volume in dollars is going to be the best dollar volume in like 5-6 months in October. So units, that's even higher. And it plays to that whole thing. We are a distributor, and the distribution business is good. Yeah. Is it hard? Yes, it is hard. Is it frustrating? Yes, it is frustrating. But there's plenty of business out there every day. We're 1.3 million plus housing starts. That is nothing, not great, but it's not terrible either. If we look over, outside of the COVID years, that was a good number.
Yeah.
Yes.
Exactly.
Should we be
well, thanks,
building
you guys.
1.4 to 1.5 million? Yes, absolutely. And if we were, lumber prices would be $200 to $300 a thousand higher.
Exactly. Have fun in Kansas City.
I appreciate it, guys.
Yeah, good deal. See you guys.
Have a good one today, Charles.
Y'all be good.
All right, guys.
Cheers.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.